Well, my big takeaway, Steve, is that they've actually blown through the results of the US counterparts. And I've been saying this in the morning, but it's always interesting to see UBS's results on the investment banking side because they are a bellwether for what's to come in the next couple of weeks out of other European banks. And just to give you an idea, generally speaking, US banks recorded a revenue growth on the investment banking side of about 10%, equities growth of 14%, and FIC of 9%. UBS today saw equities growth of 17% year-on-year and FIC growth of 33% year-on-year. So really high numbers in the investment banking division. And as you mentioned, very solid numbers as well in the wealth management division as well. Profit pre-tax there was up 7% or so. So the numbers are looking very solid. But as ever, the question is, look, if you've had a very strong Q1, you've had a very strong Q2, have we reached the high watermark for the year? I asked Mr. Ermotti that question. Let's take a listen.
I'm pleased, first of all, that we had 2 consecutive quarters where we reach a return on tangible equity above 15%. I still stay confident that we, like in the last few years, we have been able to navigate challenging market conditions and deliver good returns to our shareholders. I do believe that we will continue to have a solid performance also for the rest of the year.
Talking specifically about your investment banking business, I see there was a decent pickup on the equities business, also the FX business as well. What do you point that down to?
Well, first of all, remember last year in FX, the second quarter was a very slow quarter, very low volatility overall. And this year we have a more normalized environment, not really exuberant, but more normalized. And also the fact that we deployed out new technology in terms of execution engines allowed us to capture market share. If I look at equities, we were up 40% again. A lot is due to technology developments. We had also good momentum in Asia in executing the inclusion of Chinese stocks into the MSCI, and in general, we see good flows across the board.
How much of the pickup in activity can be pointed to the fact that your competition is withdrawing somewhat in that space and other European banks have been retrenching?
I don't honestly think that is a big factor. I think the competitive landscape is quite diverse, and you know, 1 or 2 players slowing down a little bit don't make such a big difference. I do think that is due to the fact that we have been investing heavily in technology, in enhancing our execution capabilities, particularly in respect of the MiFID requirements. So we are at the forefront of this, and we continue to invest in order to keep our competitive advantage.
Do you feel that investing a lot in technology on one hand makes pricing a lot more transparent, but on the other hand also mitigates the margins that you can include in some of these products?
Well, I think that is inevitable. Margins are going to be under pressure for the foreseeable future in our industry, and like in any global industry that competes. I think investing in technology is a mean to serve better clients and also create efficiencies. So we are working on both levers. It's not just a margin compressions, but technology allows us also to reduce cost, and that's very much what we are working on right now.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.